Well, good afternoon. It's a pleasure to be here at the second annual Ondo Summit, and pleasure to be on stage with two of the finest from the Trump administration, I must say. We have Patrick Witt, who's the Executive Director of the President's Council on Digital Assets, working in the White House, coordinating across government. And then we have Tyler Williams, who's coordinating across Treasury on the implementation of all the crypto-related items, including the Genius Act. Thank you all for being here today. Thanks for taking time. Lots going on. And so the prep for questioning of you, Patrick, is very difficult because you're so in motion, right? You started from, when did you start at the White House?
I started detailing over from the Pentagon in April of last year.
And then took over as executive director.
Late summer, yeah.
So it's been an incredible journey to watch you do this. But I think it'd be great for a scene setter on what's happened over the last year, because a lot's changed just from election day of 2024 to today. So bring us up to speed on what's happened as a result of President Trump's election.
Well, it's been a flurry of activity, as you mentioned, not just on crypto policy, but across the board. This administration came in with a raft of executive orders and different actions that we started to move out on. I personally had a front row seat to that because I served on the transition. So I was one of the day one employees down there and got to see the different teams that many of whom had served in Trump 45 come back again this time around and kind of pick up right where they left off. And that core nucleus at the White House, too, with Chief of Staff Susie Wiles, Stephen Miller, others, had been working together, and some of them in the first Trump administration, but then certainly that was the campaign team. So it really just, we hit the ground running. And on the crypto side in particular, that was moves immediately to get the right people in place at the agencies, to nominate the correct folks, to bring in people like Tyler over at Treasury and build this incredible team, because it's not just the White House. It requires everyone at these different agencies that touch on crypto policy, even in places that might not be obvious to people on the outside that have a hand in this. So President assembled an amazing team. We got multiple executive orders signed. The first one, the ending Operation Choke Point 2.0, the Biden administration's misguided, let's say, policy of regulation by enforcement that had really just prosecuted and put crypto in the crosshairs and took a technology and an industry that really America should have embraced and put it on the outs and drove a lot of that innovation offshore. So we put an end to that. That's still an ongoing effort to root that out entirely. We got the executive order on the strategic Bitcoin reserve signed into law, stopped the government from liquidating assets. By some accounts, I think we missed out on tens of billions or maybe even upwards of $100 billion of assets that could have been held on the balance sheet because they were sold in fire sales just without much thought whatsoever. And then obviously the big legislative push to get the Genius Act passed. So Tyler and team over at Treasury are now hard at work implementing the follow-on rules from that. I know they're working around the clock. There's a lot in there, a lot of directed rulemakings. But that one, I think you've already seen the response to that with people onshoring. New Fidelity just issued a stablecoin the other day. More and more people entering this space, foreign heads of state, foreign ministers of economies, central bankers, all very interested in what the U.S. is doing with stablecoin policy. And then the next one that dominates my time these days is the market structure legislation. So the Clarity Act, which you have worked on multiple pieces of legislation over the years. We finally got one over to the Senate last week, which I'm sure we'll talk about. We passed it out of the Senate Ag Committee to the floor of the Senate, and now we're trying to play catch up on the banking side. Some issues still outstanding to resolve there, but that's a quick summary, not that quick, just because there is so much that has happened. But it's been a privilege to serve in this role, and there's still more to do.
Well, to look at the Biden administration, their approach to crypto, just the change in the election, just that change took us from a very negative view of digital assets where in order to be an innovator, you had to be offshore. That's the only way you could actually flourish with digital assets. You couldn't be in the United States. To the election, and just by the election of President Trump being pro-crypto, that changed the whole market. and actually made innovators look back to the United States. And then all the work that you and your colleagues have put in coordinating with Congress and the agencies has actually really driven the creators to come back, and innovate here domestically. It's a quite welcome thing, and a lot more to come. And we'll get to that because what you've been up to just in the last couple of days is market moving and substantial. But Tyler, Patrick mentioned the passage of the Genius Act, stablecoin law. We had negotiated during my time in Congress. We had negotiated for 5 years. My first meeting on the House Financial Services Committee as the ranking member, as a lead Republican, was to bring in outside experts to talk about crypto market regulation, stablecoin regulation 5 years ago. And so to watch that glacial pace of Congress and then the election and how quickly you're able to drive Congress to act on a stablecoin law and the passage of the Genius Act. And that happened when? April of last year? May?
It got signed into law in July.
July. That's fast for Congress.
Very quick.
Now you have all the work of implementing a law, a new piece of legislation, and the work that you're doing within Treasury and to coordinate with these agencies on the regulatory implementation. Walk us through that work.
Yeah, maybe I'll do that. I'll do the second stage. I want to just add one thing that I think is really helpful to how the administration set it up in terms of the executive director role, Patrick's role at the White House. It serves as a nucleus for all of the people across the government to work with each other. So we went through this process from the early day of the administration with the first executive order that asked the whole of the government to produce a comprehensive report on crypto policy regulation, like put all of your thoughts on paper of what's broken and what we need to fix. And we did that, and it keeps that group together. Like, we meet on a regular basis, we talk to each other, and you know this adage, like, personnel is policy in Washington, and like, we all work together, we all like each other, I think. So like, just wanted to add that. So we published this, and I think David Sachs calls it the Crypto Bible. Like, it's literally on the website.
So how big was that report? Describe that for folks watching and where they could get it.
We did thousands of meetings across like the Treasury Department, White House, SEC, CFTC, DOJ, all of the other participants in the core working group. And from that, we spent months writing this report. And I think there's over 111 recommendations in there across agencies and departments, what Congress should do, what the regulators should do, how they should think about market structure legislation, how they should think about market structure certainty in the absence of legislation. So we sort of covered the watershed. And I think it's 168 pages, 400 plus footnotes, if I'm counting.
And where can they get that? Where can the public get this?
It's on the White House website, crypto.gov. So Go there, read it. If you want to meet with us about it, come talk to us.
So you compiled what all the agencies could do across government in that coordination.
That's right.
So what is happening right now with the Genius Act?
Well, on the Genius implementation, and I want to be a little careful not to talk about like specific timelines and things like that, but the bill and the act requires that Treasury coordinate with the bank regulators, whether it's the Fed, FDIC, OCC, and CUA for the credit unions. They all have supervisory and regulatory authority over stablecoin issuance. It contemplates sort of a dual framework like we have in the state and federal banking system, where you can be a state licensed entity, but you can also go to the OCC and get a license from the OCC to charter your stablecoin issuer. So there's the whole government from a bank regulatory perspective is involved. And what I was saying about this early report, like it helps because we all talk to each other all the time. We all work with each other. And so we really set out on this approach, at least from Treasury, that we wanted to make sure we did an advance notice of proposed rulemaking. So we put that out, and we got 400 plus comments back, and we're going through that. The next step that we'll really get to is we'll do proposed rules, which takes time. We have deadlines under the act that are 1 year in July. We have 18-month deadlines. We have three-year deadlines. So
we'll leave it to Congress to come up with these quirky timelines.
And I would say, just for like the people who think about Treasury is a huge building. We have domestic finance, international affairs, and then the terrorism, risk, and financial intelligence vertical. And then we have the IRS and other bureaus. So we work across the building, the crypto team at Treasury, so we cover the whole building and every piece of Treasury.
Okay, so with the Genius Act, we're in that pretty tight timeline. With the Genius Act, the passage of the Genius Act, I think we've taken some of that for granted, right? And the market has taken the fact that we have clear law when it comes to regulating stablecoins in the United States for all 50 states. The model that was before the Genius Act, that all the issuances went through, all the volume went through, was the New York regulatory model. So in many ways, the passage of the Genius Act was not really a revelation for stablecoins. You could issue it through New York. There's a clear regulatory perimeter there. But with just the passage of the Genius Act, and we're not even a year, don't even have a year anniversary yet, we've seen this rush of innovation and volume into stablecoins. And you see heavily regulated institutions, large financial institutions, get into this. You mentioned Fidelity's announcement of Fidelity offering a stablecoin. You see these major players making these moves. You see this with a panel of participants today of some of the largest asset managers in the world here at the Ondo Summit. So that's just one piece of the whole crypto conversation is stablecoins. Important, yes, but less than 5% of the total dollar value of crypto is in stablecoins. Let's talk about the 95%. Okay, this is the complex bit that needs to be wrestled with. Talk about the complexities of market structure. What is the Clarity Act that the House passed with a very wide bipartisan majority that the Senate is working through? Give us the state of play there and a bit of the top line struggles.
Mm-hmm. Well, I think it starts with what you just mentioned, which is this is covering and affecting a much larger, orders of magnitude larger size of the pie here. So as you mentioned, stablecoins incredibly important. They're going to continue to grow. Some projections have them just with incredible compounded annual growth rates into the future, but still a relatively small portion of the crypto industry. So most of the tokens out there that are trading, most of the companies that are engaging in this space are intermediaries, exchanges, broker-dealers, custodians, you name it. This is the bill that sets the rules of the road for them. How are the tokens going to be treated? Ultimately, who has jurisdictional authority over them between the SEC and the CFTC? It grants spot authority over digital commodities to the CFTC, currently a large gap. That's not a partisan issue. Both sides of the aisle recognize that that's a major issue right now, that there's all this economic activity and market manipulation potentially and bad actors that are just ultimately outside of the regulatory scope. So some of those are kind of basic table stakes. In addition to that, it goes into a definition of what is this thing we call decentralized finance? What is truly decentralized? Which regulators can opine on that and help flesh out some of that? Because within DeFi, there are multiple different business models. And what are the obligations for those different protocols? At the same time, which of these do we want to make sure are not being captured in the regulatory umbrella here that are ultimately just developers writing code, software, in the same way that someone publishing a website doesn't, it's similar types of ideas. Web3, truly, this is kind of the extension of that, just mainly into the financial space. So it has developer protections in it. It has certain activities that we are saying explicitly are not subject to Securities Exchange Act, 3334 Act, Commodities Exchange Act on the CFTC side. So there's a bunch in there. And then this other piece, which we can get into in a moment, which unfortunately we thought we had kind of put to bed in the Genius Act, but the issue of stablecoins coming up again in the context not of stablecoin issuers themselves, how they can pay or not pay rewards and yield, but in this case through the digital asset intermediaries, the exchanges, the broker-dealers, those third parties in between. That is now another point of contention that we're working through with the interested.
So about that, you saw the delay in the Senate Banking Committee markup of Clarity because they couldn't work out a compromise on what some Democratic supporters and some Republican supporters had, which is a concern about stablecoins offering yield. The Genius Act has some permissibility for rewards. This has become, in banking terms, this major issue where they're talking about deposit flight from banks and a concern about bank failures as a result of this. I think that's hypothetical. There's no data that bears that out, but that is the terms of debate that the banks have had. I think it's noteworthy that you brought both the banking industry together and major crypto players in the stablecoin regime together for a meeting at the White House yesterday. Mm-hmm. I think that shows the importance to the president, to the White House, of getting a market structure bill. That's how I read it from the outside, from the cheap seats here. But you organized the meeting. You invited everyone that you invited attended. And I think it would be useful for us to hear your description of what happened and how we should think about that prioritization. From my cheap seats, I think it's a welcome sign that you brought these warring factions together and made a major statement to them.
Yeah, well, it absolutely is an indication of the importance that we put on this legislation. The president spoke, I guess, a couple weeks ago over in Davos about the market structure legislation. Again, just the other day in the Oval Office, he wants to see this get done. He wants another bill on his desk ready to sign. We'd love to have another big signing ceremony like we did with Genius. And we view this as kind of the last, at least, legislative piece that we have to get right. This is kind of the crown jewel that's missing right now. But we wanted folks to come together. There have been conversations on both sides of this debate, the banks amongst themselves and the crypto companies amongst themselves. And ultimately, there wasn't that dialogue happening across the chasm here. So it's a first step. It was intentionally not CEO level. This was more policy leads, lawyers, technical experts in the room. Come forward, swords down, make it as professional as we can. This is not about feelings. Let's keep it facts-based. And let's have a constructive dialogue about where we are, what are the red lines, where are the areas that there's actually some agreement here, and there are, and then where do we have the sharpest disagreement? And let's close the gap on those and potentially even think creatively about different ways that we could potentially pull things in that aren't necessarily germane just to stable coins, but there's other regulatory priorities of both sides of this debate that are also priorities. And so to the extent that we can't necessarily solve it exactly word for word on a page, potentially adding some carrots and sticks, if you will, to close that gap. So it was a good dialogue, the first of several conversations. But as we communicated to the individuals that participated, and I do thank them for coming and participating, it was a good debate, or not debate, it was a dialogue, and it stayed
well, it could be a debate at points, right?
At points, but no, as I communicated to them, time is not on our side here, and to the banks in the room, the Genius Act is law. And that is the current status quo. So if the arguments made on the bank side are to be believed that this is the sky is falling, this is the end of the world, this is your opportunity to potentially make a material improvement over the status quo. But if ultimately this bill fails or falls down because of this issue, you get nothing. You get Genius. It is what it is. So approach it with a little bit of humility. And then also on the crypto side, what we've communicated to them is this bill, as we just talked about, has so many other good pieces to it. And there's so much that is necessary and positive for the industry. The stablecoin rewards yield issue is an important one, but it's not the core of this bill. And so let's keep things in perspective and approach things rationally and see if we can't land the plane on this. But I do think this is ultimately, with stablecoins, it's a new product. It's threatening to some people that aren't the most familiar with blockchain technology overall and stablecoins in particular. But ultimately, we do believe, as my boss David Sachs communicated over in Davos recently, this is actually an opportunity. This is a product that can be a win-win for the entire financial system, not just crypto at the bank's expense, but actually the banks have a real opportunity here to offer new products, and new business models can be built on top of these products. So we're managing through an interim period, but ultimately I think folks in call it a year, 2 years, 3 years, once they get more familiar with this is going to become part of the financial fabric, and will certainly not be as threatening, and people will be quite excited about it.
Yes, and look, we're here at the Ondo Summit, and Ondo is the market leader in bringing securities and real-world assets on-chain. This has been largely a product offered to non-U.S. citizens until this year, and the big announcement of this summit is about bringing this back to the United States. That would not have happened but for the election of President Trump, and but for the work that you two gentlemen are doing and your teams are doing. That should be a very welcome thing to the U.S. economy. But riding on that, the most important thing for Ondo and for real-world assets is making sure you have permissionless systems that can operate and compete in the marketplace. Permissionless systems are really the core of what makes crypto a long-term value proposition. How do you view permissionless systems? How do you view that concept, and where does that fall in the regulatory ambit?
It's hugely important. As you mentioned, the real innovation with crypto are these decentralized systems, permissionless, open blockchains. That's not to say crypto doesn't have applications in the traditional sense through fintech and taking existing centralized business models and making them more efficient, lower cost, lower friction. But we want to make sure that we're preserving what is really unique and special about crypto. So within the bill, as I mentioned, there are developer protections for those developing non-custodial software in a decentralized fashion. So we've taken a strong stance in preserving those in there. Mindful of, and it is not just on the Democratic side, but also on the Republican side, nobody wants to pass something that ultimately provides a license to engage in a bunch of illicit activity or that could be used to further adversarial ends. So we're striking that balance, and then on the exemptions from the different regulatory acts here, we're engaging with SIFMA, with the traditional players on the commodity side, CME, ICE, and others, to make sure that we're threading the needle between where something goes from just publishing software, and we don't want to criminalize code or subject that to overly burdensome regulations, while also making clear that when you do cross over into that commercial sphere and it becomes something that you have control over or custody of assets, you are going to have some responsibility. So trying to bring as much clarity to it as possible, but knowing that we have many members that are still getting up to speed on what this technology means.
Yeah. And Tyler, you mentioned the coordination between agencies and how vital that is. Treasury usually stands in the midst of these financial regulators and trying to get them to talk to one another. That is always a difficult thing. With the competing interests of credit unions versus banks, and we see this with state banks versus federal versus national banks. It seems like all that is even more heightened right now, given what's happened in the market. We saw the CFTC and SEC, traditionally adversarial agencies for territory, have joint announcements and a goal of coordination. Where does Treasury sit with that coordination across all these regulatory agencies?
Well, so we do it across a wide range of topics, whether it's like banking issues, whether it's modernization for different previous acts that have been put in place. What you and Patrick were just talking about, the legislative side of things. We live that with regard to the effectuation and the implementation of the Bank Secrecy Act. So that has been delegated across regulators. So a lot of what this market structure bill would do is contemplate different organizational structures for how different registrants would be subject to the Bank Secrecy Act. So this debate about what is DeFi and what is true DeFi, you hear a lot of Washington talk about this. It's often referring back to the guidance that FinCEN put out in 2019, and what does control over user funds actually mean in law. So when we work with the regulators, we're working with the SEC, the CFTC, and all of our touch points that we have from that. Treasury sits on the board of SIPC. Many people may not know that. So we have different equities in no pun intended. We have different equities in many different debates just because of how Treasury is situated in the U.S. government. But I think a lot of our work that we've been doing with Patrick and team on the market structure side of things is just trying to be as like fact-based and evidence-based of like, here's how the law works, here's how sanctions work, here's how the Bank Secrecy Act worked, and like getting all of our experts from like the FinCEN team and the OFAC team to talk to policymakers, because it is hard and it is confusing. And you know this very well, like it's hard to have experts on very specific minutia on congressional staff. So if we can lend ourselves to the debate and be constructive, like this is a bipartisan issue, and like we can do that. So that's our role.
From the outside world, the marketplace looks at redundancy of law, right? And says, well, we have 5 different laws that try to do the same thing. Why do we have this? And from my stance as a former lawmaker, the reason is because lawmakers don't know what the law is. So they're like, well, this example on OFAC, right? We don't want rogue regimes being able to use digital assets to carry out their ill intent. Well, first of all, it's an open permissionless blockchain. We can go watch them on this, right? Number one. Number two, we already have laws to go get the bad guys. We just need to make sure they're well adapted to the technology of the day, and that agencies have the capacity to get the best technology to go do that and go get the bad guys. So a lot of this is educational work that I know you both spend a massive amount of time on, educating policymakers about what is existent and why you shouldn't kill an opportunity for the United States out of something that they don't quite understand, a fear that they don't quite understand or have grounds to hyperventilate about.
On the point that you mentioned around certain lawmakers don't necessarily know what the law is, this is not to call any one individual out.
I mean, I'm the one that called them out, and
well,
I spent 20 years in Congress.
In the context of the Senate Banking Committee, for example, I won't necessarily say who, but one of the members said we're talking about Title I, the classification, token taxonomy, SEC versus CFTC authorities, and we're going back and forth on, okay, this is for securities, but what if something's not a security? What about Bitcoin or Ethereum or one of these other ones? And it's like, well, there's this other agency called the CFTC that we're going to be giving authority to regulate these markets, and there's another committee called the Senate Agricultural Committee that's debating provisions of that right now. So there is a bit of a blind spot between the two committees because of the dual nature.
And I feel a bit called out by that because that was part of the struggle of legislating when I was chair last Congress, is that we understand the regulatory perimeter around securities in the Financial Services Committee, and we just think the Ag Committee doesn't know anything about commodities. But when we start talking, you realize, well, wait a second, you have a resilient market here, we have a resilient market here. Why don't we take the best of both rather than try to reinvent the wheel? But okay, so we are sitting at still February of 2026. You're 13 months into the Trump administration, 12 and a half months into the Trump administration. Success for this last year was passage of the Genius Act. Years in the making, a huge revolution for crypto in the United States. We saw what 2025 was. Tyler, at the regulatory level, what does success look like in 2026? Patrick, at the legislative level, what does success look like in 2026? Tyler?
I think success would look like we have rules in place. We have given the public the information to consume and give us feedback on. So we'll have a constructive engagement with the public on the regulatory implementation. You'll see that not only from us, but from the other regulators. And then I think take the contents of everything that we put in the report and make forward progress on all of the recommendations that we made in there where we don't need Congress to act on.
Okay, and that is at breakneck speed for government, is what you're suggesting. What is breakneck speed for government, just so you can say it out loud for the world to hear?
Not on Genius implementation, but on the other things. I think in the report there's tons of stuff that we put in there on tax policy issues, for example. I think making forward progress on that would be so big for the industry. So like we'll try to keep pushing on all that.
Okay. Patrick?
Building off of that, you mentioned tax. On the legislative side, obviously market structure is priority number 1, 2, and 3, as my boss David Sachs says. So we are deeply focused on that. We're in the thick of it right now with the negotiations. Success would look like obviously passing it out of the banking committee, reconciling those products from the banking and ag committees to getting a bill that is ready to be voted on the floor, and passing that obviously on the House side as well. So getting market structure enacted. And then also there is movement on some tax bills in Congress as well. There's one that's been introduced on the House side. Senator Crapo on the Senate side has recently held hearings. So there is optimism that we might be able to get a product ready for prime time in a short amount of time, relatively speaking.
So if I can put you on the spot, Patrick, when does the president sign the Clarity Act into law?
Well, I have a birthday coming up, so let's say April 3rd. How about that?
From your lips to God's ear.
Here we go.
April 3rd. So we heard it here first. Now I've killed the microphone again today. All right. We just heard April 3rd. I can't get a microphone to work. This is the third microphone I've killed today. So Patrick Witt said April 3rd, President will have the Clarity Act signed into law. That is optimism, but I think it's quite realistic given the level of work that you, your boss, and your boss's boss have put into crypto being made in America once again. And I must say, to wrap this section, these are two examples of fabulous people working in government, working for the public interest here. And I think what you've just heard from this panel today is the best of this administration in Washington. They are committed to the public service and to getting quick and solid action on digital assets. This is a reason why we should be optimistic about digital assets in the United States, and the United States being once again the capital of crypto for the world. And so with that, thank you all for being here. Mr. Witt, Mr. Williams, and that is a wrap for this section.